The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision. The company discussed in this episode was a personal investment of the host. At no point did the host invest client accounts or advise clients to invest in this company.
3.
Hey everyone, welcome back to another episode of In the Market Trenches. If this is your first time listening to us, remember you can find us anywhere that podcasts are available. You can check us out at inthemarkettrenches.podbean.com. You can check us out at snn.network, and you can find us at the SNN YouTube channel. That's youtube.com/SNNwire. Good to see you in person again.
Ahoy, hoy.
So for this session, we were talking about what we wanted to do, and I decided...
Whoa. Producer Bobby says that we need to banter for like at least 1 to 2 minutes before just diving right in.
It's been a little while since I've had a therapy session, so I'm feeling good about diving into my therapy session.
Producer Bobby, do we got to banter?
We have to. Bruce?
I don't know. I think Eric wants to. I think he wants to get into it.
He wants to. Yeah, this is a therapy session for Mr.
He's
Eric.
ready. He's ready to rock. I mean, I know we talked a little pregame, but I think Eric's ready to go.
I'm ready. Yeah.
All right. Well, then, if you're ready to go, I had a whole lineup of banter planned, but I'll punt it to the next episode.
Okay. We'll punt it to the next episode.
All right.
So,
what are we talking about?
I'll take the mic back and I'll say that this week we're talking about innovative food holdings, IVFH. Just keep in mind this discussion, it's about our participation at this moment in time. I haven't really followed the company since I've exited the position. I have no strong opinion.
You haven't been in, we should say we, in this instance, it was only you.
It's just me.
You haven't been involved for how long?
It has to be 4 or 5 years.
Feels like at least 4 years, right? Maybe
at least 4, probably close to 5.
Let's see that Philly conference where we saw the guy, that was 2016, right? And so you were involved for what, like at least 3 to 6 months before that?
Yeah, probably.
Okay. It was 2016, right?
I had a very short stop with this name.
Yeah, but it was a hilarious name to sort of be involved, or for you to. Well, it was a hilarious name for me to follow, and for you to be involved in, and then sort of after the fact, right?
Yeah, I would say this was just more. I learned more about myself in investing in this. I paid a little bit of tuition for that.
By that you mean you lost some money?
Yeah, yeah. And I had you kind of, I don't want to say coaching me from the sidelines, but we had some friendly discussions about this, and
Well, I just didn't get it. I mean,
you just didn't get it. I felt like I did, and I was wrong, and you were right.
Well, I don't know if I mean,
based on my P&L statement, I was wrong. You were right.
I'm wrong about it.
I learned a lot.
I'm wrong about an awful lot of things too. So it's not like but like I was just super skeptical of this, along with a few other ones. So let's start at a high level. What is innovative food?
So innovative food holdings, they do like specialty distribution of food products. And so they had a couple of different divisions. The main one was their Chef Direct. Was that it? Yeah, I think that's what it was called. And that was where they basically supplied and distributed all the foods for specialty foods, gourmet foods, generic foods, to all these various places.
And did this business generally, if I recall, made money?
It made money. At its core, it was a pretty good business. The main risk was they had one main customer, and that was U.S. Foods. And this was at a time where U.S. Foods and Cisco were contemplating merging together. So there was some risk there if the merger went through that they would get dropped as part of that deal.
Now, were you involved when this merger was announced, and or was that later?
So I don't know when I actually entered the position. I think it was announced. I knew it was a risk, and then I entered.
Okay, and the DOJ ultimately successfully blocked that merger. There was much. There was going to be too much market power between the two entities.
Yeah,
because the food delivery business is an oligopolistic structure. There's like 3 main players. It's Cisco, U.S. Foods, and Performant. It's not Performant. pinnacle.
Yeah.
I don't know why.
But the decision tree for me was, so recognizing it's a risk. It's, this merger is going to go through. Will it go through or no? And I thought that there was some good chance that the DOJ may block this.
You had one buying two, and that's
right.
That tends to be problematic.
Right. And then if it did go through, what's the probability that they get dropped as, that they get cut out of that deal? I didn't know how to probability weight that, but I knew a couple of nodes on the decision tree needed to go through for that to impact me as a shareholder. And so I looked at that direct to chef, the chef direct business. I thought at its core, it makes money. It's a good business. I don't mind owning it. I think that's probably worth the market cap at the time. And then they had this fresh diet business, which I felt like was just an option on the whole thing. So that could really take this thing higher. If it was successful, it was great. There was a lot of scuttlebutt research that was done on the Fresh Direct.
Yeah. So before we get into Fresh Direct, let's go through
Fresh Diet. Sorry,
yes,
Fresh Direct is the other food delivery.
It's something different.
Yeah,
That's is that
it was the Fresh Diet.
We're going to call that a more successful VC company.
Yes.
Okay.
Yes, we could.
That's what we'll call that. Okay. So how did we initially come across this one?
So this idea started where all good ideas come from, and that's online message board.
An online internet forum for people who are talking about different ideas. So we found this idea in a forum, and some of these forums, I mean, we mentioned going to these conferences is like going to the Star Wars Cantina. Like if you could create a forum for the Star Wars Cantina, like some of these it'd be a very, very similar kind of look and feel, right?
Yep.
So. Okay, so this was online forum, had a lot of pretty rabid followers, right?
A lot, yep.
And they had recently raised some money to do this this Fresh Diet deal, right? And we knew the gentleman that did the pipe.
Yep. So they raised some money to do the Fresh Diet deal. They had some outside shareholder that apparently had a not so good background. They want to try and get off the Diet. And they wanted to get off the shareholder roster, and so they had to raise some money to take him out. And we know some of the people that were involved in that.
He was in jail, right? Isn't that what it was? Yeah. I don't know for what. But.
I don't know either. I never actually found out his name. I'm sure we could find it if we wanted to.
It's not worth my return on time with that is like terrible.
Yeah.
So we're not going to do it.
Yeah. Yeah, and so they took care of that. They kind of thought that was a hairy situation that they fixed.
If I recall, the stock was optically kind of inexpensive looking, right?
Yeah. Oh, yeah. It was
like a single-digit PE multiple kind of deal. Normally, when you see something that has a single-digit PE, I think, it's usually for a pretty good reason. This one had, I think, a reasonable reason, but maybe.
In hindsight, it had a reasonable reason. I think I wasn't aware of why it was so cheap at the time. I don't know anyone really. I don't know who was really trafficking this in a major way other than the people that were a part of the forum.
Yeah. And it was sort of a cult stock among these guys, right? I mean, a lot of these guys, they drink their own Kool-Aid, and it's so what I mean, like we're usually super skeptical when we see a group of people just down in Kool-Aid.
Yeah, and so when I saw the announcement of the Fresh Diet, this is also right around the time that my wife and I started trying their own food delivery services. We tried Blue Apron. We really liked that. We understood it. We tried Sunbasket. I was like, wow, this is great. And then I see they do this deal, and I think, wow, if it could be just a fraction of what these are, which is like the first terrible idea to think of, they could just be a fraction of.
Well, it looked like it was a reasonably priced deal.
It looked like it was a reasonably priced deal. You go on the site, you look at what their offering is, you look at what the delivery times look like, what the portions look like. I mean, it looked like this is something that I could get behind as a consumer myself.
Yeah.
And I think one of my fallacies here is I projected my own experience with food delivery onto what may be with this investment. And I think that's one mistake I made.
Well, I think,
you being out on the sticks.
So we actually
and that's kind of, this is.
No, we'd actually signed up for Blue Apron at one point. We'd gotten signed up for Blue Apron at one point, and I guess it seemed fine enough. I mean, but I always questioned whether or not that was a viable business from a unit economics perspective, just generally get something the size of Blue Apron. And
right.
so, you know, and I'm always kind of skeptical that, hey, we've got this big sexy market here, and if we can only, you know, we define our market really, really broadly, and if we only get a sliver of that, hey, you know, we're all going to be wearing covered in gold chains, wearing gold-plated diapers, and you know, I'm always kind of skeptical about that, because like one of the most influential books that I've ever read as it relates to investing is Peter Thiel's 0 to 1.
Mm-hmm.
And you know what he says in that book is, you know, you have perfect competition and you have monopoly and you have everything in between.
Yep.
And he says the problem is that everybody lies about what they are. You know, Google just got slapped with an antitrust suit from the U.S. government. Years Google would say, you know, listen, we're just, you know, okay, you know, you're talking about search, but that's not the right way to define who we are.
Yep.
We're this advertising company, and if you look at the whole advertising world, look how big it is. And we're only like a small part of the advertising world, and we are not the monopoly you are looking for. And I'm sort of, for those of you listening, I'm waving my hand like Obi-Wan Kenobi. We're not the monopoly you're looking for. And these guys, you know, like the other, but the people who have crappy businesses or like at their core aren't that great. They will also lie, and they'll say something to the effect of, "Hey, look, this is a huge market opportunity out here, and if we only get a little sliver of it, you know, then it's, you know, gold-plated diapers." And you know, I'm always just sort of super skeptical on his face whenever I see that. So like with Fresh Diet, I looked at that and I thought to myself, well, I don't know. It's
and one of the risks just in the food delivery business in general was always, can your client acquisitions outpace the lost clients? Because I think people are kind of fickle with these things where they want to, hey, let's try something new for a few weeks or a few months, and then it just kind of like your retention rate tends to be kind of lower.
Well, I think the other key issue at its core is that you always find your best customers first, and they're the cheapest to acquire.
Right.
And so that way, as these businesses grow and get bigger, their the CAC, we'll call it, the customer acquisition cost.
All about the CAC.
It's all about the CAC, baby. The customer acquisition costs just grind higher, because you're having it becomes harder and harder to find people that really want and like to use your product. So you got to do things. You got to offer them a free trial. You got to offer them referral fees for friends and family, like all this sort of stuff that, like, with your first best customers, like they use it and they tell their friends because they love it. And then, you know, if their friends love it, then their friends sign up, and you catch a little bit of wildfire there. But it inevitably, it's not all things are inevitably, but with these things, a lot of them will tend to slow. So like, I wasn't sold on this as a business and a business model. And I really didn't know about Direct Chef, was it?
Chef's Warehouse?
Chef's Warehouse is a different company.
Yeah. Oh, yeah. Chef Direct.
So their other business, I looked at it and I went, I don't think there's customer concentration risk here, but like, you know, are they lighting money on fire with this Fresh Diet acquisition? And this is a company that did a lot of little deals, right?
Yeah.
I mean, every quarter they were announcing a $2 million deal to buy this. $2 million. What you want to?
Let's go to. We'll get to that. Let's go to the conference.
Okay, so we wound up attending a conference where management from this company was presenting, and you know, there was time for Q. And the conference had a lot of these people who had already drank the Kool-Aid, and a lot of these people drink the Kool-Aid because, like, you know, hey, this guy will call me back right away, or, you know, I'll text him and he'll text me back, and, you know, like, and they sort of think like they're involved because the guy will talk to them.
Mm-hmm.
And like, I kind of look like I sort of think that being overly available as a CEO is a little bit of that's also actually kind of a red flag to me. Like, I want them to talk to me if I'm a significant shareholder or as a shareholder, generally speaking, but they really shouldn't be overly available, right?
Yeah.
So like that and this, like, being overly available to the Kool-Aid drinkers was sort of a red flag in my mind. But so anyway, this guy was at this conference, and they were given a presentation, and then I don't remember anything about the presentation. What do you remember about the presentation?
I don't remember much. I remember the CEO spoke for a little bit, and then they had the guy that was heading up the Fresh Diet talk for a little bit, and he held up all the products and showed, this is so great, and look what it is. And didn't somebody
that was there like pre-order 3 years worth of fresh Diet, like, yeah. And like and that passed for value added research of some kind?
I mean, I don't just as an aside, if you do that and a company files for bankruptcy, like you're just a general creditor to the company. I don't. Like, how does it even work? How are you going to claw that back? I don't.
Yeah, you're a guck, right? So
yeah,
I mean, and I think that's ultimately what happened because they ended up having to bank BK the fresh
diet, and so you're just a general unsecured claims holder. Anyway, that's an aside.
That's a different. And this is 2016. I don't think Blue Apron. I don't think that they were listed yet. So like the sort of the gap between the VC valuation for some of these really high profile ones was like they were unicorns at that point still, right?
Oh yeah, you had a ton of VC money.
And what did they pay for Fresh Diet?
I don't remember. It was like 8.
It was like 7 or 8. It was not a 10-digit number, right? It was a 8-digit number, right?
Yeah. And it seemed,
or wasn't even like a 7-digit number?
Yeah, it was a 7-digit number.
Okay.
And it seemed pretty reasonable. It maybe even seemed cheap.
Yeah, so
on the cheaper side of reasonable, which is, go ahead.
So I don't even really remember what they said in this presentation. I said I don't remember the presentation. I don't really remember what they said during the presentation.
I'm just going to pause you right here. And so Gary and I had back and forth in this name for a little while. And I always chalked it up to, well, Gary doesn't understand this and whatever. Then Gary at this conference basically punched me in the forehead with this question. Go ahead.
So they go through this entire presentation about, the company, whatever. I don't remember anything about the presentation about the company. They bring the guy up from Fresh Diet. I just remember that, he was a fairly handsome fellow, and that was it. I mean, and I have there's nothing, that's the only thing I really remember about him. And so then they move to the Q&A section, and they're taking questions from people, and I don't remember. Do you remember any of the other questions that were asked?
Didn't matter.
Okay. So, and then like, I kind of raised my hand and like to ask a question. And so they finally get to me. And my question was pretty simple. It was something along the lines of, these food meal kit delivery businesses are red hot right now. VCs are throwing money at it as fast as they possibly can. They're shoveling money into these things at some pretty high valuations. And I was like, and I said, would you guys agree with that? And they go, oh yeah, it's a really hot space. And I'm like, and you guys paid what for this? It was whatever multiple it was. And they threw out some really, really low number. And I said, can you just explain to me your good fortune? Like, how were you able to get this at such a lovely, lovely price when if this was any good, the VCs would be shoveling money at it as fast as they can along with everything else? And what was the answer? Like, I don't even, like, they were kind of like.
So it was kind of one of those moments for me where like, I'm listening to Gary and I'm just like, I'm looking at him like, yes. And then you turn to the people presenting like, I cannot wait to hear what you have to say. And I think the response basically downplayed your question, stripped it of all credibility, and it was just kind of like something in jest. Like, oh yeah, we were just really lucky.
We were in the right, it was some version of like, we were in the right place at the right time. And like, these things don't, like, if somebody's got something that's really valuable, like they're going to shop it and like, they're going to shop it widely. And like, you're not going to be the guy getting that phone call. Like, it's just not going to happen. They're going to call, the biggest VC funds in the world, the ones that were involved in Blue Apron, and what was the other one that folded ultimately? Plated,
yeah.
Plated ultimately folded. Like they're people don't go hat in hand to people like you if they've really got something. Like, and so it just doesn't happen.
I hear this response. I look around the rest of the room. The rest of the room just seemed kind of okay with that, and it's like, yeah, we got a great deal. This is a great deal. And I'm just sitting there like, that's just not how this works. And
you know what it reminded me of is and a lot of the interactions with these people remind me of this. So we Eric and I will reference this bit quite a bit, but there was an episode of The Simpsons, the one that was like 22 short stories about Springfield, where they're going around the town, and it was I don't know, was it season 6, season 7? I forget. It's an earlier one, and I think The Simpsons are kind of like SNL, where like where you were from like ages 8 to 12 is where you think it's funny. So I sort of think The Simpsons stopped being funny somewhere around age 15. So I sort of cut off around season 8 or 9. Season 10 is even a stretch for me. But we referenced this bit where like Superintendent Chalmers is the only straight guy in this. He's the straight man in the Abbott and Costello routine. And he shows up at Skinner's house for dinner, and Skinner burns dinner. And so he runs to Krusty Burger to get the meal. And when he's there, the kitchen's on fire. He puts them in the oven to heat them up, and they catch fire, and the whole thing's burning. And Skinner just makes up a series of lies, and Chalmers is just like, "What is going on in your kitchen?" And Skinner's like, "Oh, that's the Aurora Borealis." And he's like, "Aurora Borealis at this time of the year in this part of the country, completely confined to your kitchen."
Yes.
And Skinner's like, "May I see it?" And Superintendent Chalmers is like, "May I see it?"
No.
And like that's like the
and just like that's an acceptable answer. Just no.
And it's just like,
okay, like.
And there's a lot of times in this space where we're having interactions with people where we feel like Superintendent Chalmers.
And so shortly after that, I mean, I don't know how much longer after that, I think I fell into this fallacy, this gambler's fallacy, where like, okay, I was a little down on the position. If I could just get right back to break even, I'll sell the position, walk away.
Yeah, we've since moved on from that line of mentality.
It's just not.
The stock doesn't know what we paid for it, nor does it care.
Yeah, cost basis is not a valuation metric, and it should not be a part of anyone's analysis. And so,
except to the extent you want to take a tax loss.
Sure. And so then I just, I never recouped it. I just at some point just cut bait, moved on.
And so these guys, they did a lot of these little deals. Like Fresh Diet wasn't just, that was the biggest one that they did, and they spent probably a high seven-figure sum on it, which actually was pretty substantial for them in the context of the company.
Mm-hmm.
And so, but they did a bunch of other little ones, right?
Yeah, I mean, I always had some other concerns where I thought the executive compensation was a little rich, just given
out of line,
where the company was and what they were doing, what their growth trajectories were. They awarded themselves some stock, and something kind of seemed off.
A lot of the stock seemed awarded, not paid for. Right. There didn't seem to be a lot of accountability at the board level.
Yeah.
But there were all these little deals too. And on this company, shortly thereafter and we know the people that were asking questions on this call. One of the other things that made us basically stay away from it forever, even after they sort of got out of the Fresh Diet thing and the Cisco deal didn't happen and whatever else was, a friend of ours got on the last quarterly call they did, and they stopped doing quarterly calls after this because of my friend. We may have it on here at some point. But basically during that call, they announced another deal, and he asked a very innocuous question, which and I can't find a transcript of this anywhere. There was one at one point. Maybe if we dig hard enough, we can find it. But he basically asked, like, how do you know the people that you're acquiring? Like, how do you know these guys? And what was the response, Eric?
He basically jumped from that for whatever reason and said, well, these aren't related party transactions. Like, well, that's weird. That wasn't the question.
So it's like if
you now I have some follow-up questions.
So it's like if you came home like really late at 2 a.m. and your wife asked you, where have you been all night? And you said, I'm not cheating on you. It's like, wait, what? And so and the whole conference call just devolved from there.
I think it just devolved from there, and it just got super, super aggressive. And after that, it was announced that they wouldn't do any more quarterly conference calls.
Was it announced, or did they just simply quietly stop doing them?
I think for some reason I want to say there was some sort of announcement, or maybe the CEO told one of the shareholders who broadcasted it throughout the community that
it started to make its way through the community. It started to be known that these guys would not do calls, and if you're having all these private conversations, you're not doing calls. It's like, I don't know. A lot of this stuff is should be held in a public forum, and I think during the course of this, when the whole thing broke down, what was kind of interesting to me was, the guy was like, the follow-up. So our friend asked a question, and then another guy who we don't really know asked a follow-up question. He goes, well, I'll answer that. We can't talk about that publicly. I'll take that with you offline. And the guy's like, wait. No. This is a public forum. Reg FD applies. If you can answer that question here, like, I don't understand why you can't answer that question here. It was just like the most bizarre, one of the more bizarre conference calls that I've ever listened to. And
oh, it was great.
and at one point in time, I heard one where somebody called in claiming to be Bruce Wayne and acted like Batman on the call. This was kind of even weirder than that. I mean, it's just super, super strange. And then I was reading more recently that they did a roundtable, and somebody asked if they were going to start doing conference calls again. And the guy was, and the management was like, we're going to do it soon. And the guy was like, well, 2021? He goes, maybe even. How about 2022? Oh yeah, certainly by 2022. And my thought on that was like, 2022 is just enough time for this guy to forget he ever asked the question. And so I don't know. I don't know what if they're going to do calls or not, or what have you. But and there were one or two other things that I thought were kind of interesting, but I don't think we need to go into those now because those don't really share our thoughts as of a point in time. Those sort of bleed into more current thoughts, and I would just rather not. I mean, they've got some activists involved today, and maybe there's going to be some better accountability going forward, and some other stuff like that. I sort of think that the activists might have a tough road to hoe, but we don't have a present opinion on that or anything going on in or around the company. So
yeah. I mean, if I were to summarize thank you for indulging my therapy session.
I charge by the hour.
Yeah. I'll buy you lunch.
Yeah, that seems like a good trade.
I mean, where I tripped up was, I projected my own personal experience onto an investment, which it really had no relevance here. The gambler's fallacy, I've done this a few times. I like to think that I've walked away from this type of mentality. The other thing on executive compensation, I always find it really interesting. Like, if you put yourself as management in some of these publicly traded companies, they pay themselves well. And you have to look at where are their incentives when it comes to the stock awards, and what's their base compensation, and is that reasonable for the job that they're doing and for the industry as a whole. And for a lot of these folks, I think they want to protect that compensation. If you have a CEO, I'm not saying this is the case here, if you have a CEO that's getting paid $1 million a year in base compensation and bonuses,
particularly if the company has a $10 million market cap, that's 10% of the market cap of the company that these guys are choosing to compensate themselves with. Like it's
right.
So when we're looking at management comp, it's sort of like, is there skin in the game, and did the skin come from me? And is the comp reasonable and appropriate given the size of the company and everything else? I mean,
right. And then at some of the other extremes, we talked about this in an earlier episode where we were involved with a company that basically took all their after-tax compensation and bought back stock in the open market. I mean, that tells you something too. And so just thinking and recognizing the behavior of the management is really important.
Yeah.
Producer
Bobby, you got any outstanding questions for us?
Well, I got to tell you, the one thing that stood out to me on this story, and Eric, we empathize. We feel your feelings, and we're glad that you are feeling your feelings publicly. But the one thing that stands out to me, because this is something that happens a lot in microcaps too, is this idea of betting on unicorn trends. And some of these smaller companies, like, either just starting up right away just to get the trends, or some of these companies like this that had quality traditional business that they were generating cash flow and steadily growing, and then now making an acquisition to try and capitalize on that trend. So it's pretty interesting to hear more about that and to follow that kind of thinking.
Yep.
Yeah, there's definitely a siren song to some of these things. I mean, it's like, if your own business isn't glamorous enough, you go look for something sexy and new. And sometimes, if there's these unicorn trends, those are, I mean, there's always some shiny object out there, and so it's knowing whether or not you're invested alongside somebody who tends to go for the shiny objects. Like, that's an important thing to know.
Yeah. Well, what? It's interesting. The question being is like, well, what's more successful? Being able to capitalize on that unicorn trend if you can develop it organically and not have to deploy too much additional capital in order to try and capitalize on it, or try and somehow carve out some way in which your company can maybe generate some cash flow from it? Or do you use some of your cash flow to go out and make try and make an acquisition? I think more often than not, trying to make the acquisition usually tends to fail.
I mean, there's only a handful of things that management can do with cash flow. So they had a cash flowing business in this instance. And like when you have a cash flowing business, there's only so many things you can do with it, right? You can reinvest it within the business that you have, given whatever your reinvestment opportunities are. You can pay down debt. You can return it to shareholders via dividend or a buyback. Dividends are preferable if your stock's expensive. Buybacks are preferable if your stock is cheap. And then there's M&A activities. And a lot of M&A is essentially like, occasionally I will.
I love this.
So occasionally I'll see a deal get done, and I'll just send Eric a picture of the Joker from
The Dark Knight.
The Dark Knight, where he's standing next to a pile of the gangster's money and he's just lit it on fire. And like that's like a lot of times when I see these deals, that's the image that runs through my head. I mean, I've been involved in companies where they've done deals, and I'll send Eric a note that just says, "I feel poorer."
Yeah. Yeah. And so, I think this is a good place to wrap it up. I'll thank you for punching me in the forehead with that question at the conference. You weren't involved at all. It was a great question. The response was even better. And it told me most of what I needed to know.
Well, I'll just tell you that you're a good sparring buddy, because you've punched me in the forehead a few times in my life. So,
I so wish we got like an actual real answer to that. Like, I just out of curiosity, like you just want to know, like, how did you get that deal at that price? Like, that's what I keep asking myself.
They overpaid for it.
And the reality of it is there were no other bidders, and there was a reason there were probably no other bidders. And so, that's really all it was. And it turns out they wound up having to put this subsidiary, the subsidiary that they bought it in, wound up putting that into a bankruptcy filing. And then, so it had you wondering if there was any recourse to the good business, through that whole process. And I actually don't know what the answer to that ever worked out to be. I don't think that there was, but I don't know that that's true. I don't know that before.
Yeah, it's actually probably a good thing that when they made the acquisition, they put it into a subsidiary so that they didn't have to BK the whole business.
Yeah, that was, I guess, the smartest thing they did.
Yeah.
All right, land the plane, Eric.
Well, everyone, thank you again for indulging me in my therapy session. I owe you lunch. We're going to go get that pretty soon. Remember, we're available anywhere podcasts are available. Check us out at inthemarkettrenches.podbean.com. Check us out at snn.network. Find us on the SNN YouTube channel. That's youtube.com/SNNwire. Thanks again, everyone. What did I leave out?
Rate and review us. It helps a lot. And if you or someone would like to be a guest on our show, we're looking for guests with good stories. And, I think we're kind to the storyteller. So
thank you. All right. Talk to you soon, everyone.
All right.
And full disclosure, producer Bobby did not have a position in IVFH. The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.